In this video, I want to discuss the balance of payments. Now, the balance of payments is a statement of all transactions made between entities in one country and the rest of the world over a defined period of time, such as a quarter or a year. Now, there are several components of the balance of payment statement. There's the current account, which is a summary of flow of funds due to purchases of goods or services or the provision of income on financial assets. That's what we're going to focus on in this video. There's also the capital account, which is a summary of flow of funds resulting from the sale of assets between one specified country and all other countries over a specified period of time. That's a relatively small part of the balance of payments. And then there's also the financial account, which refers to special types of investment, including direct foreign investment and portfolio investment. So in this video, we'll focus on the current account. In a later video, we'll focus on the capital account and financial account. So the current account are payments for goods and services. So we're talking about merchandise, exports and imports, or you might just call them goods, which represent tangible products that are transported between countries. So clothing, machinery, etc. There's also service exports and imports between companies or between countries, such as tourism and other types of services. And the difference between total exports and total imports is referred to as the balance of trade. In the current account, we also have something referred to as primary income payments. These represent income, interest, and dividend received by investors on foreign investments in financial assets. And we can have secondary income, which represents aid, grants, and gifts from one country to another. So, for example, what would these look like? Let's look at some examples. Suppose Walmart purchases toys produced in China that it's going to sell in its U.S. stores. Well, this is going to be a U.S. cash outflow because they have to send money abroad to pay for the toys. And the entry on the U.S. balance of payments account is going to be a debit. If individuals in the U.S. purchase shoes over the internet from a firm based in Italy, this is also a cash outflow and would also be recorded as a debit on the balance of payments account. If the Canadian government pays a U.S. consulting firm for consulting services, then this is going to be a cash inflow because money is going to be coming into the U.S., and that would be a credit on the balance of payments account. In terms of primary income transactions, if a U.S. investor receives a dividend payment from a Japanese firm in which he purchased the stock, that's a U.S. cash inflow, and that represents a credit. If the U.S. Treasury sends an interest payment to a French insurance company that purchased U.S. Treasury bonds a year ago, or for that matter 10 years ago, this would be a U.S. cash outflow and would be recorded as a debit. And the final example I have for primary income transactions, suppose a Brazilian company that borrowed dollars from a bank based in the U.S. sends an interest payment to the bank. That would be a U.S. cash inflow, and that would be a credit. You also have secondary income transactions. Say the U.S. provides aid to Costa Rica in response to a flood in Costa Rica. That would be a U.S. cash outflow, would be recorded as a debit. And suppose England provides a grant to U.S. scientists to work on spinal cord research. That would be a U.S. cash inflow, and that would be recorded as a credit. Now, you can find this data online. I went to the Department of Commerce. They have a Bureau of Economic Analysis, and they have this table here. You can't see it too well. I will show you a portion of this, but there's the current account, there's the capital account, and there's also the financial account, and then they work out some balances. So to make it a little more readable, I'm just going to focus on the current account part right here. And you can see that they have exports of goods and services and income receipts. And they have it for 2016, 2017, and they have seasonally adjusted amounts for different quarters. But let's just look at 2017. So you have exports of goods and services. This is the total right here, but the goods is 1,550,720,000,000. These are in units of a million, and the services are 780,879. Okay, primary income receipts is broken up into investment income and compensation of employees. They also have secondary income here, and you have this value of 149,728. Here we have imports of goods and services. So this is stuff that we're buying in the U.S., and we're buying a certain amount of goods. We're buying a certain amount of services from overseas. And then we have these primary income payments, investment income, compensation to employees, and secondary income payments. So what I've done is I've summarized the table here. And I've put the exports of goods and the exports of services separately so you can see them more easily. And I've added them together, so that's the total amount of exports. You also have these primary income receipts and these secondary income receipts. And if we add them, if we add these rows, so I've numbered the rows, so if we add 3, 4, and 5, total exports, primary income receipts, and secondary income receipts, we get the total exports and income receipts, which would be 3,408,189,000,000. We also have imports of goods, imports of services. So adding these two together, we would get total imports. We also have these primary income payments, secondary income payments. We add all those together. These are total imports and income payments. So we add 9, 10, and 11 together, and we get 3,874,434,000,000. And we can look at the balance of trade. Balance of trade would be exports minus imports, or row 3 minus row 9, which is 568,441,000,000. So that's how much more we're importing than we're exporting to the rest of the world. And the balance of the current account is going to be total exports and income receipts, 6, minus total imports and income receipts, and we're running a current account deficit of 466,245,000,000. So you can see that if you go to this Bureau of Economic Analysis site and you print this off, you can actually see how much more we're exporting or how much more we're importing than we are exporting, so what our trade deficit is, okay? And we can also see what the current account balance is. In this case, we're running a deficit because it's negative. So in another video, I'll talk about the capital account and the financial accounts.